learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Feel how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I hope you are ready for this watch list. It is very important. Tomorrow is all about this man right here. He got the whole pal in his hands. He got the whole pal in it. Okay, anyways, but TLT is back, baby. Yes, I'm gonna use this watch list to talk about TLT and what could possibly happen to bonds tomorrow. And best of all, we're gonna go through some Fed history. So, ladies and gentlemen, you got Jerome Powell tomorrow. 2 p.m. Eastern time is when the report comes out, and then 2:30, that I don't know what that looks like on camera, but 2:30, that's when the press conference happens. And actually, it will be the first press conference in person and not held on Zoom. So it's gonna be exciting. Expect a move at 2 p.m. Expect another bigger move from 2:30 to the end of close. There is gonna be a lot of things we need to talk about. I'm gonna recap the main things for tomorrow, and then we are going to talk about what sort of stocks and especially bonds can be affected. So drop your thumbs up on the video. Make sure you are subscribed, and hopefully we see you on stream, baby. YouTube.com/thestockmarket. Do you see me spitting everywhere? Okay, anyways. All right, man, I'm just hyped, but let's get the quick rundown. Tomorrow, Powell, 2 p.m., that's when they release the written statement. 2:30, he comes on and speak. Now, why is this one so important? Because he is going to do a double rate hike. Last Fed meeting, the Fed has began raising rates the first time since like the great financial crisis, or like 2018. 2015. I guess we've done it before, but that was the first time we raised. It was a quarter point. This will be double the size, and now the main point for tomorrow is what he says about balance sheet reduction, the plan in June, and how they plan to go about it. And we even talked about it today. One big question he's probably going to get asked is, how does he feel about the state of the market? Is this what the Fed intended? We know the market has been doing his job, but this will be a big question. But all eyes are going to be on balance sheet reduction. And why do I say that? Because that could scare the market into new lows, or if there was going to be something positive, if he kind of slowed that one down but did the double rate hike, then things could be pretty decent. So for context, this is where the SPY was at last time we had the Fed meeting. The actual ECMI says that the market went down, but you could see we were dealing with some of the invasion stuff and all of that, but that actually led to a 2 or 3 week rally, so not too bad there. But this time is going to be interesting, but it is very straightforward. We need to see what is going to happen. Like I said, there might be a false reaction, or in the sense of I'm kind of expecting the market to go up afterwards, especially with some of the earnings being good, at least AMD and Airbnb today. I mean, Uber and Lyft, they did bad. That one was awful, but I think things could be a little bit better. We will really see, but in a weird way, I think the main thing is going to be in bonds. So that's what I want to talk about. Again, Powell, be there live on stream. Any developments, we will call it out if it is important. We're going to get the follow-up, but like I'm saying, the number one thing I'm looking at right now is all about the balance sheet reduction. Now, let's talk about bonds. Why do I think bonds are so important? Because I told you, this is the first time that the Fed will be doing a double rate hike since the year 2000. And then when I go back and look at other times where they have done a double rate hike, we see some interesting effects, and that's what I want to go over, because now the question is, will there be a TLT play, or in some essence, it may do the opposite. I mean, what I'm trying to say here is the last time, not 2020, but the first time that we hit TLT, it was $100 into 10,000. That was because it was the first time that they raised rates in like 10 or 20 years, and then it was also going to be the other time where they go against the market and did not want to raise after the 40-year precedent. So you may not understand if you haven't been following the Fed, but coming into this situation, I think we kind of have that on our hands again, where it's this time now, it's either the Fed is going to listen to the market, which I think they will, and keep the precedent, or they're going to do now the first rate hike in 22 years, first double rate hike. So why is this important? Because if it was going to do the opposite of the first TLT, that means it is guaranteed for the rates to go higher. So that's now a difficult proposition, because for the last 3 or 4 months, we've watched rates go the highest since the Civil War and crazier just statistics with it. And even now it's up, but this is what I got from the analysis. So let's start with March 2000, the last double rate hike. You could see here, here's the interesting one. The rate hike occurred in March 2000. You could see it went from 6 to 6.5, but look at what happened there in February. That was 5.75, but you notice this right here, it says surprise. It was a surprise tightening. So I thought that one was interesting, but now let's take a look at the bonds and where they were at. And this is where it gets interesting, because around March 2000, the rates were around like 5.75, and they went up a little bit, but then the yields went down. That would mean TLT going up. So last time they did it, it went down. The yields started to go down, but what do you notice prior? The actual full year leading into it, they ran up. So it's kind of very similar to what we have there, where they were kind of reaching a bottom, then they had this epic run up, and then things cooled out, and then it led into a stock market crash. But keep this one in mind, okay? Keep that in mind. So that one's similar. That's the one-of-one events where pretty much they did the double rate hike and TLT went up. Yields started to come down after already running. So that's the first time. Now let's go to the second time, and this is the one that I made a video on not too long ago. Remember, we talked about 1993 and 1994. That is what James Bullard was bringing up with a soft landing that was effective. They actually accomplished it. They raised rates. They raised them high. They did actually what? I think they even did 3/4 of a rate hike that year. The stock market in the next decade, it was absolutely fine. But here is that moment right here. It is April 1994. So you could see they went from 3.75 to 4.25. That is double tightening. Nothing too crazy there, but now let's go to the bonds, and you could see it's another one of these little bottoms and then crazy movements here with the bonds. But again, this time around, leading into the double rate hike, the bond yields were already moving big, but this time around, you could see it kind of stagnated for a little bit and then continued to go a little bit higher. And actually, the ironic part was they raised the rate. So from April 1994, or that May, leading into like May 1995, that's actually when they started to cut rates, and then that is when the bonds actually started to come down there. So it was pretty interesting to see, but in this case, you had a double rate hike. The bond yields continued to climb after climbing just a little bit more, and then once they started calming down, the bond markets began to retreat once again. So now, two different instances. One instance, we did a double rate hike 2000. The bond yields started coming down. They had a run up prior. Instance number 2, 1994, the bond yields actually stayed stagnant and continued to climb slowly up until they started cutting rates, and then the rates started coming down, but they also had a run up in rates leading into the double rate hike. And now the final event, and this is where it gets crazy. This is where it gets even better, because now you're going to see it. But 1987, ladies and gentlemen. So this one is where we get a little bit of a fun fact, but March 1987, we did a double rate hike. You could see here, we go from 6% to 6.5%. And now here's how it looks on the bond chart. Look at this right here, man. Look how crazy this is. And if you don't know why I'm freaking out, I'm talking about the 1987 stock market crash. Okay, but take a look here. You can see the bonds had a bunch of volatility, big drops, big pops leading into this, and you can see now this 1987 double hike, it was right there at the bottom, right here at April. Rates were like at 8.1, and you could see it moved up the bottom, but then after those rate hikes leading into it, it started to go up. But what do you think was in September, October 87? They kept rising all the way up until then, and then you have Black Monday, the 1987 stock market crash. But here's here's where it gets better. Look at the fun fact. There was no target rate from October 19 to November 3rd due to the stock market crash. In a weird way, they kind of abandoned policy or expectations, and then they started trimming for the next couple months, the next 4 or 5 months. You could see what bonds ended up doing, this little thing until they began rising away, but that actually stopped the bond yields and stopped this volatility and then led into this big downward cycle. So literally now, this instance, what happened, double rate hike, it moved up prior, it ended up going higher, and this one involved a crash or some sort of bigger volatility following thereafter. But you could see now the difference between all of these. Pretty much 2 out of the last 3 times you have seen the rates actually continue to go slightly higher. It does eventually chill out, and then rates, pretty much in every single time, the rates end up coming right back down. So we're already aware of that. We've been talking, again, that's the rate cutting cycle, but it's interesting to see how these different events gave them very different wiggle room. But there is one event where the rates actually started to go down, and that was in 2000. So hopefully this helps. This is why tomorrow is important. You know, my assessment, and what do I guess? I feel like we may go up a little, but I think it really just depends on the volatility. Pretty much, if we are not going to get much bigger volatility and we're dealing with just valuations and people scared, I think it'll play out with 2000 and TLT may actually go up. Otherwise, I think if food, energy, inflation, and other things get worse, I think it might play up where we might see a second half of rates going up. But now, I think this might start to be the second half of rates, you know, and the yields going up. We may start to see things slow down or get volatile, kind of like 87. But depending on how that plays out, it's just going to create it. But now the next move would be, when does TLT go up? But tomorrow's going to be an opportunity. We're going to talk about it. I know I spent a lot of time on that. We only made, I think I sold out of the ARLPs today, and I cut the UNG weeklies. Remember, we cut out the next week's yesterday. Those went up like 100, 150%. Got out of both of those. I bought an NTR as the follow-up. We talked about that one yesterday, and that was pretty much it. There wasn't anything else. Again, Airbnb, going to be watching it for the follow-up. Like I said, they killed it, but it really depends on the analysts, like we saw with Expedia. But they're looking pretty good. There may be even a post-earnings play with that. But now, tomorrow, I'm actually going to be focusing on bank stocks and TLT, and I think we're going to get a big move. And depending on where things go by the end of this week, I mean, people are going to start positioning for the next quarter, so I hope you're ready, baby. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shine. I need you to remember, help ain't on the way. It's already there, baby. So let's go, baby. It's the Chad. I love you. Stay hydrated. Stay healthy. I forgot what I'm going to say here, but get ready. Tomorrow will be historical, and you're living through it, baby. Glad to do it with the Chad. I love you. Peace out, and I'll see you in the morning, baby. Goodbye. I'm about to... Okay, that was...